Hello again, fellow BeachBum traders, and good day from Orlando, Florida. Thank you for joining us for part one of our weekly trading game plan for the trading week of September 19th through September 23rd, where in part one we'll take a look at what happened in the markets. We'll do our market analysis from last week, and we'll prepare our strategies and our game plan for going forward for trading, prepping for the next Fed rate hike for this week of September 19th through the 23rd. Welcome, Spacula. Thank you very much for that super chat. We greatly appreciate it. Please let me know. Again, this is my first test trying to live stream from a hotel in Orlando, so please let me know if the quality, if there's a lag, etc. So again, please let me know in the chat if there are any issues with this live stream. So I appreciate all of you joining us, and again, we'll start prepping for the next Fed rate hike. So again, please stick around to the end of the video. We'll talk about all of our strategies, trading ideas, techniques, etc. for prepping for the next Fed rate hike this week, and then also reacting to that next Fed rate hike after it is announced. So we'll look at how the markets ended up on Friday in FinViz. I'm in the homepage of FinViz. This is our notes document, our Google document with all the notes for our weekly trading game plan. You can access these notes in a public folder on our Google Drive. And again, the notes for this weekly trading game plan are in that Google Drive. The link is in the description box below. Good morning, Walter. Thank you for joining us. Glad to see you as well. So, I mean, we know the market, was pretty rough on Friday. It was quad witching day, options expiration for September. We saw these huge drops right at the open. It was very choppy throughout the day. We had a little bit of an attempt at a recovery late in the day, but we see, many more new lows, many more decliners. More below their 50-day moving average, and the majority below their 200-day moving average. So as we'll see pretty much all week, it was a pretty bearish week. And as we've been discussing, for weeks and really all that we're in a bear market, and we'll see that in the indices in a second. So if we lose, we've got a forecast cut. Got some media, Wall Street, the week ahead, churn, hiding cash, despite surging inflation. So, we've been talking about inflation still hot and sticky, and we saw that in the CPI and PPI data. Content, please hit the like button. Hopefully you're already subscribed to our BeachBum Trading YouTube channel, but please also subscribe and hit the notify button, bell icon, so that you are notified when we release additional videos. So we do these game plans. We also release educational. Again, this is all for education and entertainment purposes, not financial advice. So, and we saw this, it's a bad week, say 5%. Okay, and we saw oil's kind of been bouncing between 85, 90, and it even dipped down to the 80 range. It's been very volatile. We've seen these sector rotations in and out of energy and basic materials, etc. And we'll see that again as we look at the sectors, the groups. You see gold had declined. It hit what they say 2-year low and then recovered. and we see the markets decline. Also, the euro has been flirting back and forth with parity, which is, 1 euro equals $1. So it's been oscillating back and forth between those two. And we see the treasuries are severely inverted, where we've got the 5-year with a much higher yield rate than the 30-year, and when we see the 2-year, its yield is even higher than that. So we'll take a quick look at the. So, and thank you for your patience bearing with me. As I mentioned, this is my first test of attempting to live stream from a remote location, a hotel in Orlando. So I appreciate your patience while you bear with me while I try to learn how to navigate live streaming from a hotel. We'll look at the SPY, S&P 500. And if the performance of this hotel Wi-Fi is inadequate, maybe tomorrow I'll test using our Orbic hotspot instead. So please let me know if this is inadequate, and we can test that out at tomorrow's part 2, where for those that may not know, in part 2 of our weekly trading game plans, we'll select our individual stocks or our symbols that we're going to put on our various watch lists for watching to potentially trade next week, and again, prepping for the next Fed rate hike. So we see, the SPY broke down through its channel, gap down. It's well below its moving averages. It looks like there's a potential death cross there, all very negative signals on the SPY. If we zoom out to the weekly, again, we can see that sharp, engulfing, bearish engulfing candlestick on the S&P 500. The SPY, again, very bearish symbols. It broke down below its averages. So again, we're in a downtrending bear market. So let's look at the Qs. NASDAQ got hit real hard with that CPI data expectation miss, and then the jump in the treasury yields. So again, we see the same type of behavior, big bearish engulfing candlestick, drop below its moving average. It never really got to retest its 200-day moving average. So again, bearish. Look at the Dow. And I appreciate all that feedback, Walter, Spacula. Bearish. Look at IWM, the Russell. Pretty much the same thing. Yep. Although it's sitting, it's testing that lower moving average trend line and kind of bouncing off of it. But again, a big bearish engulfing candlestick, and so there is a risk that it could really, break down below that moving average. That moving average then would become resistance, and that is very bearish signals. So again, all indications are we're still in a bear market, and we're still in a declining market. Again, we've been talking about strategies since the beginning of the year of how we can make money in a bear market. You should be able to make money in any kind of market, bull market, bear market, etc. And again, we've been sharing strategies all year on how different ways that you can make money in a bear market. So there will be some links in the description box below to some previous videos as well, where we shared some of those strategies and techniques. So we would recommend that as well. Look at the VIX, and again, we saw a little bit of a pop, on the particularly on Friday with quad witching. That's to be expected. Quad witching days are always going to be more volatile as people tug a war around the various strike prices that they want. But it never did break 30, even with the missed expectations in the CPI, the PPI, etc. It got up in the 20, spiked to 28, but it never got to 30. So we'll see with this Fed rate hike on this week whether it causes an elevation in volatility. That is very possible. And we've talked for a couple weeks about different ways you can play volatility and make money trading volatility. So we'll look at the groups and sectors as well in FinViz. So you go to the Groups tab. Again, we have another video that explains in more detail how to use the Groups tab in FinViz. So I would refer you to that, recommend that for additional information. Good morning, blind trader. Thank you for joining us. Glad to see you again. So again, all the sectors were pretty much red on Friday. The worst was energy on Friday. So again, we're seeing these rotations between basic materials, energy, technology. We saw a rotation into real estate on Friday again. But you can see for the week, basic materials, technology were the worst, but energy was one of the best. So again, that shows us this rotation in and out of energy. They're doing the same thing with basic materials, etc. And again, for the month, the only one or the best of the worst performers is energy, and then utilities, technology, and communications services have been the worst for the whole month. So check the comments a sec. Yep, we'll talk about nat gas and oil and all that. We'll look at the futures today, etc. Talk about strategies, some of the news, and then tomorrow, we'll talk about various ways to play the various segments of energy, etc. So if I jump over to industries real quick, we can see on Friday, gold made a rebound, silver made a rebound, real estate was making a rebound. So we see the and the worst were some basic materials and some energy. Coal, steel, aluminum, etc. were the worst performers for the week. But again, so again, we're seeing these short-term rotations in and out of energy that we've been talking about for some time now, also even intraday. So energy may start in one direction and then reverse through the course of the day. And there are opportunities there that I know some of our fellow BeachBum traders are making money on. So again, there's ways to make money in any market. And our goal here is to help you provide some educational material, some of our opinions. Again, not financial advice, all of our opinions, but we want to provide you with some skills, some tools that you can use to make money in any market. So now we'll look at some of the economic data from last week. As we know, the CPI data, PPI data, about so yes, as this data comes out from the economic calendar and investing.com, I post it in this Surf the Markets channel in our Discord, as we'll see both graphically and in text format. So if you're not already participating in our BeachBum Trading community Discord, we would highly recommend you join all of our fellow BeachBum traders. There's a below. Again, it's free to join. To drink a sec. And yes, thank you, Specula. If anyone has any questions, please post them in the comments below this video and or in our Discord. You can and or we have a Facebook group as well, or via our social media from our homepage, which is beachbumtrading.com, bum without the U. So again, if you have any questions after this video, please contact us and we'll try to answer them as soon as we are able. So on Monday, again, hitting the news, Goldman Sachs reported elevated increasing levels of credit card defaults. We've been kind of talking about this in terms of that we're in a recession, some of the impacts of increasing interest rates, and we're starting to see that in increasing level of defaults. And that was something that Goldman Sachs pointed out. Then Biden had announced his cancer moonshot, and there's a reference to an article about what the potential effects of that is, but that may have a future effect, possibly positive effect on biotech, and we could talk about that going forward again. So Flippa, the Shippa, welcome. Thank you for joining us. Glad to see you. Bond plays, yeah, we'll look at some treasuries, and we'll talk plays as well going forward based on these preparing for these interest rate hikes. So then Tuesday we got the CPI data, and people kind of had the wrong expectation. Essentially, is people were expecting the CPI data to come in. It's been hot, it's been sticky. We don't really see any reason for it to be cooling off as significantly over time. And this data is from August. So, and we kind of expected around 6%. So the market had tried to rally with an expectation that hoping that core CPI and PPI would come in light. And when it did not, it reacted very negatively. So we saw a pretty dramatic downturn when that CPI data missed their expectations and came out higher than expected. So, that turned the market from this bull rally, and then the rest of the week was pretty much bearish down. So again, you could see that reaction pretty dramatic and quick. So, well, thank you, Walter. I'm glad that our game plans, our strategies have been helping you. And again, that's what we're here for, is to try to help people make money and also don't not lose money. So that is our objective. So then Wednesday, we got mortgages. Mortgage rates are going up. That's another thing. We'll talk about the strategy for interest rate hikes again as the Fed rates. That also means that mortgage rates are going to go up. a recession, right? We've had 2 quarters of declining GDP. So technically, by that definition, we're in a recession, but I know they're saying, well, we're not in a real recession. So um, I know I understand that debate. I think it's safer, in my humble opinion, to just assume we're in a recession and to trade accordingly. So thank you for letting me know. I apologize for the glitch in the video. Hopefully everything is back now. Again, thank you. I test of trying to live stream remotely using hotel Wi-Fi. Probably tomorrow I'll try using our hotspot. There seems to be issues with this hotel Wi-Fi. So again, that was a helpful test. Okay. Okay. All for your patience and thank you for joining us. Claims the continuing came in a little lighter than forecast, and again, this 4-year average is it's decreasing. So essentially, again, this is ammunition that the job market, and you see initial claims is lighter than expected. So again, more ammunition for the Fed that the jobs market is still strong. Their other dual mandate is full employment. That's not an issue. They need to get inflation down. The only real tools they have is interest rates. And so since we're coming into a decision and a press announcement by the Fed, we would expect a significant interest rate hike. And again, we'll talk about too bad in August. Again, Friday quad witching, and we saw sentiment data has been slightly improving from essentially an all-time bottom. Down, etc. We're seeing a little bit of consumer sentiment improvement, but again, this was from an all-time low. So this week, the big news is going to be the interest rate hikes. So on Wednesday at 2 p.m., as is typical, they will release their decision, and then come out and start talking. Now, to do that, and that would be my expectation. So I'm checking the video again. It looks like we may be having a little video problems. We'll keep keep going. I'm trying to correct that as well. Again, my apologies. Okay, so again, FOMC meeting is on the 21st on Wednesday. The next FOMC meetings are November, December, so nothing in October. So this one, they're going to have to make a decision for the next 2 months. So again, I expect a very hawkish stance. I know after that CPI data came out, so there was a 20-30% probability they were baking in, a potential for a full percentage point. I don't really expect that. I think they've been messaging pretty consistently that they're going to raise 75 basis points, and that would be anything different from that, I think, will cause a reaction in the market, because it's different from expectation. So earnings pretty much, is pretty light. We're wrapping up this earnings season, going into the next earnings calendar. And Alan is commenting about the FedEx, the global recession warning. And yeah, I think we should talk more going forward about the effects of a global recession. We've talked about recession proofing your portfolio for some period of time, and we have talked about global effects, and we've also talked about the effects of the dollar on U.S. companies, foreign companies, etc. So we have talked about strategies in those regards, but I think further discussion of strategies for a potential global recession are warranted. So again, investing.com, you can see the earnings calendar, see if there's any companies that you own or looking to buy that may be impacted by their earnings or in the same sector. So you can see who's announcing earnings this week. So I won't go into that in more detail right now. Okay, so let's look at the markets in Webull. Okay, Tanavir is asking, how do you play DXY? So DXY is the dollar index. And again, we talked, I think last week, our topic was the strong dollar and the impacts of the strong dollar on various commodities, dollar-denominated commodities, as well as the foreign exchange rate for U.S. companies. So yeah, we did talk about that quite a bit. We can talk about that some more if we have time. So you can see Webull's still offering 12 new stocks. I won't belabor that right now, but if you don't have a Webull account, again, great opportunity to get 12 free stocks. For just opening your account, depositing $1, you can get up to 12 free stocks, each valued, I think they say, up to like $3,000. So we like the Webull platform. This is our primary trading platform. Again, I'm using the online browser version of Webull. Alan says, I'm thinking the Fed will do 75 basis point hikes. Yep, that's my base expectation. But again, we've been talking for quite some time that, as long as we're need to prepare for and base our portfolio inflation proofing and proofing our portfolios for rising interest rates. So I've got a series of our previous strategies. We've talked about how to handle proofing your portfolio for a rising interest rates environment as well. So okay. So on the market screen on Webull, we can see markets, we can see, the NASDAQ actually performed a little bit better on Friday than the NYSE. Then if we look, okay, so again, in Webull, in the calendar tab, if you hit calendar earnings, you can see the near-term earnings. So this is a good way to see who's reporting in the near term, and it'll say boom. And thank you, Spacula, for letting people know. Yes, we'll talk about, trade alerts and how you can get access to that probably more so tomorrow. But thank you for all your help again, Spacula. It's greatly appreciated. So let's look at the best performing industries for the week, since we kind of know Friday was pretty red. So we see software was pretty negative, education negative, healthcare, renewable energy, kind of, sector rotated out, or pretty much everything was red for the week. Looking for any bright spots. Actually, communication services had a little bit of a run one day. So again, watch for these sector rotations. Tomorrow, when we look at our ETF spreadsheet as well, that's another good way. And we've talked about some various tools and techniques to watch for these sector rotations. Because when you see one, obviously there's an opportunity. If you see money flowing, like in energy on a given day or across a couple days, money will be flowing in or out of energy. Again, that offers you to look at the ETFs. So the markets, pretty much it's going to be down on the Russell, down on the Dow. See elevated VIX. Here's one of the ETFs we're watching for the VIX. Long in the VIX, we see short on Bitcoin. Short on the S&P. Again, as expected, all these are going to be bearish indicators going into Monday. So again, with the quad witching on Friday, another strategy, we're talking about prepping for Fed interest rate hikes, but another thing, again, that occurs after quad witching is people are going to be repositioning their options on Monday. So there is the potential, again, for increased volatility based on that repositioning of options. So industries, again, pretty much all red. The only bright spots, green spots on Friday is real estate, a little bit of financial services. Again, something we've been talking about for some period of time, but one of the things to prepare for and proof your portfolio for a rising interest rate environment is financial services. Financial services actually benefit from rising interest rates, particularly the way the bond curve is. They can loan out money at a higher interest rate than what they're paying in savings. catch up with the chat a little bit. Yeah, I love to see you guys helping each other out in the discussion. Seems like you're having a good discussion. So Alan's asking about market makers. Market makers, etc., is a whole nother just. I think there was a 20 to 30%, and it oscillated a little bit percent probability that they were expecting a 1 point hike, and so that leaves us 60-ish percent of 0.75, and I think there was a small percentage of 50. Some people are again still expecting just 50 again, so the mean 75. And the Fed's been pretty much communicating that, I think, relatively effectively, of a 75 basis point. So that would be my expectation. If they come out more hawkish, obviously, market's going to react negatively to that. If they come out 50, again, I don't expect that, but if they happen to, then that would be a dovish sign, and you'd see a market rally, So I hope that helps. So looking just briefly at the commodities, silver, positive. Nickel, silver had a run late in the week. Gold and silver had been beaten down pretty severely, and then they kind of bounced into the end of the week. Okay, so while that guy loads, I'm just going to jump over and start talking. Okay, let's look at futures, and then we'll talk about strategies. So again, I've got more videos on how to use the futures, how you can use the futures going forward as a good trading tool. The futures tab on FinViz. So if we look at the Dow, S&P, NASDAQ, you can see they all gapped down, and then they hammered on Friday. So, they're testing that previous bottom. Same thing, the Russell didn't quite test its previous bottom, had a little bit broader of a hammer. So again, all these are, testing that bottom. If it breaks through that previous bottom, obviously we've got more downside to come. Saw the pop in the VIX, popped up to 28, then came back down, kind of sitting in the middle, 25, 26. So again, I think, although again, we may see something with the repositioning of options on Monday or early in the week, the other strategy for dealing with the next Fed rate hike is people are going to be waiting for that. So I wouldn't be at all surprised to see a little bit of volatility with repositioning of options, but then everybody waiting for the Fed decision on Wednesday. So then we see energy, oil. Again, it tested that 90. 90 has now become a resistance level, bounced down to 85. 85 is one support level. We also see it went down to 80. So it's kind of bouncing in that range right now, oil. So again, there's opportunities. Again, we'll talk in more detail tomorrow about particular ways to play individual commodities, etc. But we've talked for a long time. We use Gush and Drip and UCO and SCO to long and short oil. Natural gas, again, very volatile, so they're a regular, um, day trade, intraday trade. Opportunities in natural gas, you can see how volatile it's been. It tested 9 and then immediately rejected and came down below 8. So, nice opportunity. Cold was running. Again, we long natural gas using boil and short natural gas using cold, KOLD. And again, I know a number of BeachBum traders, fellow BeachBum traders, are making good money trading natural gas with boil and cold. So gold, we see gold and silver got hammered down, and then silver made a strong rebound. It looks like gold is tempting. We can see it tested that bottom, and it started to rebound again on Friday as well. So again, there are potential swing trade opportunities here. If you're not already long gold, particularly gold, we can see it's declined. So when it does make a swing trade turn up tomorrow, we'll look at some ETFs that you can use to play gold long. Again, silver's already made kind of a run. Looks like it's consolidating. So it has, may go back and retest this low again. Agricultural products, we'll look at the ETFs tomorrow to see if we have any opportunities. Again, very volatile. So here's the treasuries, and Tanavir and others were asking about bonds, treasuries, etc. So again, what we've been seeing is as the dollar strengthens, particularly somebody was asking particularly about the dollar. So as the dollar strengthens, that's hitting the bond yields are increasing, which drives bond prices down. We've also got accelerated quantitative tightening from the Fed. So again, that's increased downward pressure on bond prices and increases the yields. So again, it's been driving all the bonds down, and you can see they're testing their long-term lows. So again, when the dollar strengthens, it drives the bonds down. When it weakens a little bit, we could see some improvement in the bonds. And again, it'll be dependent on this Fed interest rate decision coming up. So again, foreign currencies, we've talked about the euro parity, how to some ways to play that. We've looked at the yen. You can see the yen gapped up and made a recovery. And again, this euro US dollar parity is sitting about 1. Again, we see the yen made some recovery. So let's talk about some strategies for, again, how to prepare for the Fed interest rate hikes, any volatility around those announcements. So as a bonus for watching this game plan video today, in our Google Documents notes, you can see I've been working on a series of videos on how to make money when interest rates rise. Essentially, we've taken our previous strategies that we've discussed in the past and packaged them up in standalone videos. And again, you can access those via the links in the notes section today. And again, this will go over strategies we've been talking about for quite some time. So again, I would recommend you also view those strategies. And Spacula asks if the kids are home alone. Well, yes, the kids are home alone, but they won't be home alone for very long. And they do quite well on their own. So, but thank you for asking. We'll be back tomorrow, so they'll fare just fine. We also were talking about the railway worker strike and potential supply chain impacts of that, but that got settled. But Sol Dago posted a helpful article about potential impacts of railway on coal and natural gas, etc. So you might find that useful. And again, I've included our strategies on the dollar. So again, if you want to review the strategies on how to play the strong dollar up or down, we talked about that last week. So again, I'd recommend if you want more detail in those regards, DXY, again, someone asked about DXY, that's the dollar index. So again, and I've been trying to clue people in as I see this DXY going up or down early in the day, as it directly impacts commodities, etc. So energy. So let's talk more in detail about prepping for, again, the next Fed interest rate hike. So again, we expect some initial volatility early in the week due to potential repositioning of options. Then I expect, again, not financial advice, but I expect people to be waiting and seeing what the Fed's actually going to do on Wednesday. So, decreased volatility, decreased volume would not be surprising to me until we go into that Fed decision on Wednesday. So again, up until 2 o'clock on Wednesday, I would not be at all surprised, for a wait and see type stance. Once this data hits the wire, I expect, increased volatility one direction or another. Initially, the algorithms are going to jump on it, and it's going to, you're going to see either a big green or a big red candle hit right away, and then if they happen to be quote wrong, then a reaction candle. So again, a lot of volatility, and you want to know what the expectations are. I think the majority expect 75 basis points. There are a few that expect one, would like to see one to try to kill inflation more rapidly. But that's a minority, and then there's others that think 50. So you will see a reaction, and then listen to what Fed Chair Powell has to say. Does he say they need to keep at this 75 basis point thing? They need to stay hawkish. They need to kill inflation, or are they concerned about the employment market? And really, the GDP is not one of their mandates. So the recession is not their concern, and you heard them come out in the Jackson Hole, and we talked about that in the fallout from Jackson Hole, that the GDP, the recession is not their mandate, not their concern. So if it does damage to the economy, that's not their quote problem, as long as they can maintain full employment. And again, price stability is their number one thing. So now, again, when they increase interest rates, what we have seen is it strengthens the dollar. So DXY, we would expect to go up, and we would expect a similar reaction to what we've seen in dollar strengthening in terms of the commodities, initially gold, silver, etc. However, gold and silver are traditionally viewed as hedges against inflation. So, and again, foreign currencies, it'll impact the euro, the European markets, etc. And it will benefit financials. Rising interest rates benefit financials. Again, it'll pressure the bond market. We'll probably, see all the yields on all the bonds have to go catch up with the Fed interest rate, and the Fed is the terminal rate being discussed right now is somewhere between 4 to 4.25, and right now bond yields are below that. So for them to be a good attractive alternative versus a savings account, they need to be competitive with the Fed interest rate. So, and again, that's what we're seeing here is the bond yields have to now compete with the Fed interest rates, which is currently, I think, at 2.5. So if they hike 75 basis points, that'll put it to 3.25. Another 75 would put it to 4. So you can kind of see where that expectation is. So again, once we get that announcement, hopefully this will give you some strategies, to handle the immediate reaction, as well as once we get that announcement, is it truly 75? Then what is our strategy for playing the interest rate hike. So if you have any questions, again, you can put them in the comments to this video. Also, you can contact me in the Discord. Also, one of our Discord members shared this helpful tool, Trading Economics Commodities, which is I have the link to this Trading Economics site as a link in the link section on our homepage as well. So this is useful for watching the commodities on a and currency on a daily basis. So we hope that all. Again, if you have any questions, join us in our Discord. You can find the link in the description box below. It's free to join. We've got a great group of fellow BeachBum traders who obviously also in the discussion here are helping each other out. That's our goal.